The information provided in today's video is strictly legal information and not legal advice. In order to ascertain legal advice for yourself or your business, please consult a tax lawyer. Thank you. Hi there, my name is Marco. I'm a tax lawyer. Today we are talking about the principal residence exemption under the Income Tax Act. At a high level, the principal residence exemption under the Income Tax Act allows Canadian residents to shelter the capital gains arising from the sale of their principal residence in each taxation year. Moreover, there is no limit on the amount of the principal residence exemption that a Canadian resident can claim. However, in recent years, the Canada Revenue Agency has been auditing house flippers and property owners that have been, to their assertions, engaging in property flipping or short-term. In recent years, the Canada Revenue Agency has been auditing individuals who they assert have been property flipping. These are individuals that have purchased a house with the intention of flipping the house rather than living in the home for a prolonged period of time. Today we will go through various documents that will help you prepare to challenge an assessment denying your principal residence exemption. On the other hand, it might help you prepare for an audit. Now, generally, how do these principal residence exemption audits arise? Well, they arise when individuals engage in multiple transactions, multiple claims of the principal residence exemption, and they generally start with an audit under the Excise Tax Act in order to determine whether the individual who claimed the principal residence exemption should have remitted GST on a taxable supply of a new home into the marketplace. Now, here's the Government of Canada publication which states, flipping houses or condos, know your tax obligations. This is a high-level overview that states what is property flipping and when will the CRA pursue an individual who they believe is property flipping. Second, here is the income tax folio or the principal residence income tax folio that the CRA uses in order to determine whether an individual can rightfully claim the principal residence exemption on their tax return. Here is the legislation that is applicable to the principal residence exemption. The definition of principal residence exemption is found in Section 54 of the Income Tax Act under principal residence. Essentially, an individual may claim the principal residence exemption should that individual have lived or ordinarily inhabited a home. Now, the principal residence exemption is a very technical exemption, and if you have been reassessed, it may be beneficial for yourself to consult with a tax lawyer in order to determine whether the reassessment is fair or whether you have a legal basis in order to challenge the assessment. As previously mentioned, generally the principal residence exemption audits start with a Excise Tax Act or HST/GST audit. Generally, the HST auditor will determine whether you made a taxable supply to the marketplace and should have collected and remitted HST to the government. Finally, if you find yourself in a situation where you are being reassessed, or if you find yourself in a situation where you have been reassessed and would like to challenge the reassessment at tax court or internally with the CRA Appeals Division, you may contact a tax lawyer and contact myself at taxationcounsel.ca. Remember, it is imperative to quickly act on a reassessment as you only have 1 year to challenge that reassessment. And if not, you're very unlikely to challenge that taxation year. Thank you very much and have a good day. As always, you may contact myself should you require legal assistance or representation in front of the CRA or the tax court.